then in part D of the required, determine whether Division B should discontinue the production of desktop computers using the incremental approach. And you should ignore the possibility of an internal transfer of motherboards. All right, so when we are performing this calculation, we are assuming that Division B is still purchasing the motherboards externally. All right, guys, now the required specifically tells you that you must perform the calculation using the incremental approach. Now you'll see in the suggested solution, I have included the total approach, but please, if you've used the total approach, you can't award yourself any marks for the total approach because the required does specifically say that you must use the incremental approach. The only reason why I've included the total approach in the suggested solution is for learning purposes. So if you want to compare the incremental approach to the total approach, the solution is there for you. However, for the purposes of this question, you are required to use the incremental approach. All right, so we need to determine whether the production of desktop computers should be discontinued or not. So if you go back to the information provided in the scenario, first what I'm going to do is just take into account all of this information that we've been given in the notes. So first, guys, in note 1, we are told that direct material cost per unit increased by 12% on the 1st of July 2019. So this increase will only affect the next financial year. However, please remember, when you are making a decision, we are making a decision about the future. Up until this point, the division has been producing desktop computers. We are now deciding whether in the future they should continue producing desktop computers or they should discontinue the production of desktop computers. So because you are making a decision about the future, any expected changes in costs or revenue should be taken into account in your calculations. So that's what we're going to start with over here. Let's start with the calculation. So we're not yet actually looking at the discontinuation decision. First, we're just making sense of the actual results that we were provided with. All right, so first let's look at direct material. We know that the direct material cost per unit increased by 12% on the 1st of July 2019. So what we need to do for both products is we need to calculate the direct material cost per unit. We've got the cost in total. So if you want the cost per unit, you obviously just need to divide by the number of units. And then the cost per unit needs to increase by 12%. So let's perform that calculation. All right, so in all of our calculations, when we get to the actual discontinuation decision, we won't use the old material cost per unit. Instead, we'll be using the new material cost per unit because we are making a decision about the future. So any changes in cost must be taken into account in our calculations. Then in note 2, we were told that all laborers are permanently employed. So we already marked this off. That means that labor is a fixed cost. We also know that direct material is a variable cost, and the overheads are semi-variable because they include both a fixed and variable portion. So let's just read through note 3 again, which gave us more information relating to overheads. Overheads are allocated to production based on units produced. The actual fixed overheads amounted to 13.8 million. All right. So above, you've been given the total overhead cost, which includes both a fixed and a variable portion. We know that the fixed portion is 13.8 million, so that means the balance must be variable. So let's split this out. Let's calculate what the fixed overhead is and what the variable overhead is. All right, so the total overhead for Division B is 23.4 million. We know that the fixed portion is 13.8 million. So that means the variable portion is 9.6 million. All right. Now, when it comes to variable costs, it's preferable to work with a variable cost per unit and not variable costs in total, because the logic behind this is if you have any change in your production volumes, the total variable cost is obviously going to change. However, your variable cost per unit always remains constant. So let's calculate what the cost is per unit. We were not told about any future changes in your variable overhead. So whatever the cost is per unit, that's what the expected cost is also in the future. And then if we have any changes in production volumes, we can take that into account when we are actually performing our calculation. So if we want the variable overhead cost per unit, please just be careful. We are not looking at laptop computers or desktop computers specifically. We are working with the total overhead cost. So we've calculated the total variable overhead that relates to both products. So if you want the variable overhead per unit, you're going to have to divide by 6,000 units. All right, so that gives us 1,600 Rand per unit. Then we know that the fixed overheads are 13.8 million. But we need to also analyze these fixed overheads in a bit more detail, because we know that the fixed overheads also include organizational overheads relating to head office costs that are allocated to divisions. And that's 30% of the total fixed overhead. So let's split this out. We have allocated head office costs, which are 30% of the total fixed overhead. So that's 4,140,000 Rand. And then we are told that the remainder of the fixed overheads specifically relate to Division B. So the other 70% specifically relate to Division B. All right, so that's just your balancing figure. All right, so we've made sense of all of the information provided in the notes, and we now need to look at the discontinuation decision. All right, guys, so what I'm going to look at first is, let's first look at what's going to happen to the desktop computers if we discontinue. Obviously, they're going to lose out on the income that they'll make from the sale of those computers. But it's important to note that all of the variable costs will also be saved. If they discontinue the production of desktop computers, they won't have any direct material costs, and they also won't have any variable overhead costs. So for now, I want you to ignore the fixed costs. We are going to ignore the fixed labor cost, and we're going to ignore the fixed portion of the overhead. We are only going to look at sales and all of the variable costs. So let's first calculate the lost contribution if they discontinue the production of desktop computers. Or in other words, this is your opportunity cost. Okay, so like I said, for now, we're only looking at sales and variable costs. We are only looking at contribution. We'll deal with fixed costs separately. So if they discontinue the production of desktop computers, they are going to lose out on sales of 17.4 million Rand. Then how do we calculate contribution? Remember, contribution is sales minus variable costs. So what are the variable costs? The first variable cost we have is direct material. Now be careful. The the direct material cost is going to increase by 12%, or it has increased by 12%. So the cost per unit is 8,344 Rand. So that's what you need to use in your calculation over here. So that's the variable cost per unit, the material cost per unit. And they are currently producing 1,200 desktop computers. So that will give you the material cost in total. All right, as an alternative, you could obviously just take this material cost over here that relates to desktop computers and just increase that by 12%, and you'll get exactly the same answer. All right. Then the only other variable cost that we have is the variable overheads. So just above, we calculated that the variable overhead cost per unit is 1,600 Rand. Right, remember just to reference all your calculations, please, guys. So that's from calculation 2. So once again, if we want that cost in total, we just need to multiply by 1,200 units. So sales minus variable cost gives you contribution. So the logic behind what I'm doing over here, guys, is if they continue producing desktop computers, they will obviously earn income from the sale of the desktop computers, but they will also incur these variable costs, the material and the variable overhead costs. So if they continue producing desktop computers, they will make a contribution, or Division B will make a contribution of 5,467,200. That's the contribution that they will make from the sale of desktop computers if they continue. So in other words, if they discontinue, this is the contribution that they are going to lose out on. So this is their lost contribution if they discontinue the production of desktop computers. And this isn't an actual cost. If they discontinue, they won't have this as an actual cost. This is just lost income. It's income that they are going to be giving up. So in other words, it's an opportunity cost. And it is obviously relevant because opportunity costs are relevant when we are using the incremental approach. Now, all right, so this is how I'm going to perform the calculation. I'll then discuss an alternative with you now. So let's look at this. We are using the incremental approach. To perform the discontinuation decision. So first we calculated the contribution that they will lose out on if they stop producing desktop computers. All right, and that was calculation 4. All right, and guys, that is an opportunity cost. They are forfeiting this income if they stop producing the desktop computers. Now, what you could do as an alternative, instead of just showing this in one step over here, you could have shown this in 3 separate steps. First, you could show the income that they are losing out on, so the lost revenue. So show the revenue as a cost, but then you need to take into account the fact that the direct material costs and the variable overhead costs will be saved if they discontinue the production of desktop computers. So as an alternative, what you could have done is this is the income that they are losing out on, so show that separately, but then also show the fact that they will save direct material costs and they will save variable overhead costs. So you could show all 3 of those amounts separately in your calculation, but it's important to note regardless of how you perform the calculation, you'll obviously come back to exactly the same answer. All right, so that deals with the sales and the variable costs relating to desktop computers. I said to you we're going to look at the fixed costs separately. We'll look at the fixed labor cost and the fixed overheads separately. Before we get to the fixed costs, let's look at what's going to happen to the sale of laptop computers if they discontinue the sale of desktop computers. You were specifically told that the spare capacity will be used to increase the production of laptop computers to 5,500 units. So currently they are producing and selling 4,800 laptop computers, and that's now going to increase to 5,500. Now please note, guys, this will obviously affect sales And it will also affect all of the variable costs relating to the production of laptop computers, because obviously if you're now producing more units, all of the variable costs are going to increase. Then in addition to that, it's important to note that the selling price of laptop computers is going to decrease to 11,500 Rand per unit to ensure that all of the additional laptops which are produced can actually be sold. All right, so once again, how I'm going to perform this calculation is I'm going to start by looking at the impact on the sales and the variable costs of the laptop computers. We'll leave the fixed costs till the end. So we'll ignore fixed labor costs and the fixed overheads for now. We'll look at the impact on those costs right at the end. We are just looking at how discontinuing the production of desktop computers will affect the sales and variable costs of laptop computers. All right, so firstly, there's two things that are going to affect the sale of laptop computers. The sales volume changes and also the selling price per unit changes. So we need to calculate the impact of both of those changes. So let's first look at the increase in units sold. If they discontinue the production of desktop computers, they are then going to sell 5,500 laptop computers. They currently only sell 4,800 laptop computers, so that's an increase of 700 units. So if you go back to the information provided, we've been given the total sales value, and we also know that that's based on selling 4,800 units. So we can calculate the current selling price per unit. So the current selling price per unit is 12,000 Rand. So obviously, if the number of units sold is going to increase by 700 units, that will cause sales to increase. So if the selling price per unit is 12,000, we multiply that by the 700 units to calculate the increase in sales as a result of the additional units that will be sold. Please note, I'm going to look at the decrease in the selling price separately. So that's why I'm still using the old selling price here of 12,000 Rand per unit. Separately, I'm going to deal with the decrease in the selling price per unit, because we also know that they're going to drop the selling price to 11,500 Rand per unit. So I'm not ignoring that, I'm just going to look at that separately. First, I'm just dealing with how the increase in sales volume is going to affect sales. All right, using the old selling price still. So this is going to have the effect of increasing sales by 8.4 million Rand. All right, because they are now selling an additional 700 units. However, we do need to take into account the fact that the selling price per unit is going to drop. So the current selling price per unit is 12,000, and it's going to decrease to 11,500. So that's a drop of 500 Rand per unit. So if we are trying to calculate the impact that this will have on sales, it's a drop of 500 Rand per unit on all of the units that they're going to sell. All 5,500 units are going to be sold at 11,500 Rand instead of 12,000 Rand. So to calculate the impact, you need to multiply by 5,500 units. So as a result of the decrease in the selling price per unit, sales will drop by 2,750,000 Rand. So you can calculate then the net increase in sales. So the net increase, because your sales volume is increasing, sales will increase by 8.4 million because of the additional 700 units that are going to be sold. However, the selling price per unit is going to drop by 500 Rand, and that's going to cause sales to decrease by 2,750,000. So the net effect is an increase of 5,650,000 rand. All right, so we've dealt with the sales of laptop computers. We now need to look at the variable costs associated to laptop computers. So the two variable costs that we have are direct material and variable overheads. So let's first look at direct material. We know that the direct material cost per unit is going to increase by 12% to 4,032 Rand. Now, guys, obviously, if your sales volume and your production volume is increasing by 700 units, that's going to cause all of your variable costs to also increase. So your direct material cost is going to increase because of the additional 700 units that are going to be sold. All right, so it's the 4,032 Rand per unit multiplied by the additional 700 units will give you the increase in the direct material costs. And exactly the same logic applies to the variable overheads. The variable overhead cost per unit is 1,600 Rand. So if they're going to be producing an additional 700 laptop computers, then obviously the variable overheads associated to laptop computers will increase. All right, and that's calculation 2. Make sure that you clearly reference all calculations.